Have you ever looked at a green candle and in your mindset you are thinking that buyers are winning, or also looked at maybe a red candle and see that our price is going up? So here's the thing: the candlestick is not just about green candles or red candles. It's actually telling you a story of what is happening in the market. So the time you start looking at the candles as a story, then you see that your trading starts to change, in the sense that you start analyzing the market based on the actions that those candles are taking. Either the market is trending high or coming low, maybe buyers are in pressure or sellers are in pressure. This enables you to read the chart in a different pattern, not just looking at every green candle as buying pressure and every red candle as selling pressure, but able to understand the dynamics between both of them. But before we go deep into this, if you are new to this channel, this is OCEEYFX. I tend to break down complex forex terms into simple form to enable traders who are ready and serious in learning trading to understand the psychology and the theoretical aspect in trading. So if you are willing and ready to understand the concept I'm going to be dropping, which are more contents that are coming up, just do well to subscribe and hit the bell button on your YouTube so you can get more content from us. Let's get into this. So let's start from the bullish candle. When looking at a bullish candle, what comes to your mind? You know that a bullish candle simply is a candle that closes higher than where it's opened. So what is this trying to tell us? It's trying to tell us about buyers who are ready to buy at even higher price in the market. So let's take a look at an example, maybe like EUR USD, which opens around 1.10000. So then you see buyers stepping in. So on such charts, you might see price moving from maybe 1.1010 to 1.1020, and probably price can close at 1.030. That's trying to show you the significant improve from where the price opened to where the price is closing. So that's what a bullish candle is talking to us about. So the green candle is actually showing us the buying pressure, showing us that buyers supersede in the market, like it's closed from the open and closes bullish. So the bigger the candle, the bigger the buying pressure. But this does not eventually mean that just because you see or saw a bullish candle, it's trying to tell you that you should just buy in the market. You get? So you have to look at other confluences, like where did this candle open and where did this candle close, to know what is the next step to take. Also, when looking at the bullish candle, you can be able to figure out that as soon as you see a large candle which is claiming or having a buying pressure, you will tend to see that when the buying pressure gets higher, the selling pressure gets weak and more buyers start to step in. And when buyers start to step in rapidly into the market, then you see that when you see this, you see that this is an uptrend and this is a bullish market. But there are still some factors that need to be considered before you now say, okay, I'm ready to take this as an entry. I'm ready to buy in this market. You don't just buy blindly based on you saw buying pressure and so that the selling pressure has weakened. So you have to look at it and know the matters and look at what is necessary to be assessed before you take that as a trade or as a buy setup. Let's look at these two important factors. I would like you to take this down or pen it down. So looking at this, a bullish candle can form in two different places. Let's look at a bullish candle forming in a support zone. You know that a bullish candle forming in a support zone can give you is a reasonable entry if you are not just a beginner and you already know about support and resistance. That's giving you a reasonable entry. But a bullish candle forming in a resistance zone, and you can see that this is a resistance zone, and if you are seeing a bullish candle forming there, you tell yourself that can I enter this trade? Is it reasonable for me to enter this trade? So you can most times avoid such trade. So the positions or where you locate those candles really matter, not just about is a bullish candle, it has buying pressure and all of that. You have to get in check to know, is this forming in a support zone or is it forming in a resistance zone? Then that's what tell you that yes, I'm now a trader that knows how to read the chart. That brings your mindset to know that yes, I'm now reading the chart and not just trading randomly. Now let's switch the story. Let's move to a bearish candle. So just like how we look at the bullish candle and we spoke about it, that it is when price closed above where it opened. In a bearish candle, you can say price closed below where it opened. That's to show you that sellers were able to push price way down or a little bit down to show that yes, sellers are now presently in the market. So let's take an example. Let's look at GBP USD, and you saw that the price opened at 1.2800, then price fell to about 1.2780. Then that will tell you that sellers are now strongly in the market and they are stepping in. The price can even go lower to 1.2760 and eventually close at 1.2750, and that's trying to tell you that this chart now is now going bearish. But you have to still look at other confluences. You can't just use that to judge that yes, it's looking bearish, let me take a trade and sell now. You have to look at other confluences, like is it from a resistance zone? Can I enter now? Is it breaking a support zone to turn to a resistance? All those kind of things going to make you determine that yes, I'm now reading the candles as a story and not just as precision, like I'm just guessing in the market. So to create a further example, let's look at buyers and sellers like in a tug of war, where you see when the candle goes up, you see buyers are in control, and when the candle comes down, you see sellers are in control. This is trying to just tell you that the constant pressure in the market, sometimes the buyers might win and sometimes the sellers might win, and you can see it sometimes, not even most times, because sometimes it really happens where you see the candle to turn out to be an indecision candle, whereby both buyers and sellers are at equilibrium. Looking at it, you can also say that okay, maybe to get a right confirmation when you're looking at your chart, when you see maybe like in a bullish trend and you see a downward movement and you have outlined your support zone, when sellers push the price down and you see the price reaching your support zone and fails to break that support zone, and you see buyers stepping in and you see momentum, that's an information for you that okay, this is time to buy. And you start looking for other confluences like momentum. You can use your market structure, you can use FEG, you can use your order block. That also applies to a resistance level. When you start seeing sellers stepping in, that should be to tell you that yeah, it's time to try to adjust yourself to know if it's any time to sell in the market. But you have to wait for more things like momentum. Like I said, in the bullish market, you have to wait for things like momentum. You have to use your FEG or order block as your mode of entry after confirmation. You can use it as your mode of entry for your confirmation of entry, so you can sell in that with that trend to follow the big boys like the hedge funds and banks and other people to sell in the market. So you just have to take that move and do that. So that's just how the buying and the selling works when you try to read your candle as a story and not just is green or is red. So let's take a quick recap and look at what we spoke about in the early hours of this class. So we spoke about the bullish candle. What do we say about the bullish candle? The bullish candle is when you see a candle that shows pressure or buys above where it opens. And what about the bearish candle? We see a bearish candle as a candle that closed lower than where it opened. So looking at these two confluences, and we've gone this far, you should be able to know in your minds and know right now that when looking at a red candle or a green candle, that shouldn't just tell you that yes, it's time to buy or it's time to sell. You should be able to put into your mind now that it should be what should I do next? Do you get? It should be what should I do next? Not just looking at the candle as red and green. Should be able to know that okay, where is this candle located? That should be your second question after knowing the color and everything. You should know that where is this candle located? Is it aligned with my trend to sell? Is it aligned with my trend to buy? So you should look at those things and going to keep you more safer in order not to make mistakes when trying to analyze your market or execute a trade. We're not just here to just teach you which button to press and which button not to press when trying to enter your trade or not. We are just here to like enlighten you more that you should be able to know that red candle and green candle doesn't just give you the privilege to just buy or sell, but you have to study the psychological aspect and also know that okay, what am I going to do next after knowing what this candle says. That's what I'm just trying to break down into its simplest form. So this is OCEEYFX, trade with psychology and not just emotions.